What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today. We are here for Super Bowl weekend, and we're going to be doing the Super Bowl of trading strategies today. We're going to be focusing on how to grow small accounts, focusing on just Friday trading. And this is something I've spoke about, extensively before, and I'm going to bring it back to your attention today to help you achieve your financial goals. All right. So if you're ready, let's step into the war zone. First and foremost, let me shout out some of you guys up on the screen right now. So we have Daryl, what's going on, brother? Manuel, good to see you. Taro, what's going on? Ramon, what's going on, brother? Roop, what's going on, sister? Madavi, what's going on? Wei, what's going on? Wayne, what's going on? Salstar, good to see you. Andy, what's going on? LC Universal, what's up, brother? All right. Let's do Nick, Aziz. Good to see you guys. All right. So what we're gonna do here, guys, is we're gonna look at the last 4 Fridays. I have them here, and let's just briefly talk about the pros and cons of Friday trading. So, okay. So generally, the reason why we like trading on Fridays is because the market is usually a lot more volatile. Okay. The market is a lot more volatile during Fridays, and that is a day trader's dream because we want to come in the market when it's not choppy. We want to come into the market when there's going to be movements, either up or down. It doesn't matter. We want to come in there and capitalize. Hit me with a 1 if you guys agree with me. So what we're going to do to capitalize on this movements here, guys, is we are going to use reversal style of trading. Okay, so reversal style of trading is going to be the best for options, right? Because you have to remember that the option premiums always go, the other way. So for example, if we're running up, the call price is going to be increasing and the put price is going to be decreasing. So if you catch a call or a put on a reversal play, you actually have a better chance of making bigger gains. Okay. I'm going to show you guys how to do that today. And what we really want to focus on are the fractal trades, Fibonacci, orbs, and triggers, which we're going to talk about today, which we always focus on. And then one thing I wanted to mention, guys, is also futures versus options. What's going on, Ron? Good to see you. Ruth, what's going on? Good to see you. So the futures versus options is a very interesting dynamic because if you trade futures, you don't have any time decay. As an example, you can hold things a little bit longer without worrying about that decay. Whereas with 0 day to expiry options, sometimes you got to get in and out quickly in order to make a gain. Okay, so essentially what I'm going to do here is I'm going to just draw a few things here, and let's work on this together. Okay, so pretend this is the high of any day. So this is the high of the trading day. This is the low of the trading day. Okay. So in between we have candlesticks, right? We have blah 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 blah. Okay. So we have a high and a low. And the first simplest way that I like to teach reversal trading is simply using measured move extensions of this range. So if I take a Fibonacci from the low to the high like this, so this area right above here, so this area from the 10% all the way up to the 272 and even higher, depending on how far you want to go, will give you good risk reward. So I'm going to go ahead and draw this box here. Okay. And then what we're going to do is we're going to do the same thing for the other side. Okay. So I'm going to go ahead and draw the high to the low like this. And then we're going to draw this box like this. And what we're seeing here, guys, is these areas that I have here on purple are Fibonacci based areas that are all going to be great areas for reversal style trading. So for example, if we go ahead and we break through the low, okay, from the 10% down to the 272 is going to be an amazing area to pick up calls because the calls are going to be cheap as we're making new lows. And then if we do the opposite and we break above, it's going to be an excellent opportunity to try for puts. And what I'm speaking from here, guys, is strictly a risk to reward perspective, because remember, it's not just about getting the direction right, but it's also getting a good deal. And that's what we're looking for, guys. When we trade options, we're looking for a good deal. So the first strategy here that I want to show you guys is basically the breakout of the range and using the range breakout areas as reversals. So I'm going to show you guys a few examples of that. But hit me with the 3 if you're following me so far. So let me go ahead and see if I can find one. Yes. So here's an example. So this is Friday. So this is February 4th. So this is a Friday not too long ago. And again, so using 0 days to expire options, I'm going to go ahead and show you guys this strategy. So this is what we call the previous day's range break, right? And we're going to be looking for reversals. So we're going to draw it together now. Here we go. Here's the previous day's high, right? And then we're going to go ahead and draw the low. Where's the low? There. Okay. And again, the whole point of the strategy is what we're trying to do is when we break out of the high or the low, we're going to be looking for cheap plays in the other direction. Okay. Because it's a reversal style of trading. Okay. So I'm going to go ahead and draw the fib from the high to the low like this. And you'll see what we'll do is we'll hit the replay together so we can look at it together. Okay. All right. So there we go. There's your range. So you know that your zone, what you're going to be looking for is going to be right down here between the 10% and 272. This is, a nice little break area. And you can use any one of these Fibonacci's, anyone. But what you want to do is if you want to wait for confirmation, you can wait for a particular candlestick pattern at the level to give you an extra confirmation. All right, so we go in here, we slightly break, okay? We turn back up. So there's your first trade, okay? We come right by the 10%, we put in a doji. So what you're doing here is as we're going down, guys, you're buying calls because the calls are going to be cheaper. You see what I'm saying? And then here was actually the best play of the day where we come back and we come into the 272 zone right here, okay? And then we put in this outside bar. So this is like an A+ setup because we're in the zone. We get a setup, right? We have an outside bar here. And what you're going to be doing is buying calls because what you're looking for here is a reversal. And remember, after all of this push down, right? After all that push down, the calls are going to be cheap. And then if we fast forward, guys, we had a huge move. And I remember taking this play here. The calls went for well over 100%, guys, well over. And that's kind of the basic strategy where you're looking for. You want to do the opposite, right? Because the opposite is always going to give you better risk to reward, always. And combining the Fibonacci with the actual levels and the candlestick patterns are going to help you to get a better setup. So the first strategy is right here, basically the reversal style of trading using the previous day's range. And you can do the same thing if we break above the high. So the high is up here. So if we broke above the high and we had that reversal signal, you want to go ahead and do that for puts instead of calls. All right. So hit me with a 5 if you guys followed me there. Hit me with a 5. And I appreciate you guys giving me your Super Bowl halftime time. Appreciate it. So the reversal style of trading is a very powerful way of trading because essentially you're trying to do the opposite of what's going on in the chart. So if we're going lower, you're trying to buy calls. If we're going higher, you're trying to buy puts. And what that does is it just tries to ensure that you get a good deal, right? That's the whole point of the game. You want a good deal, okay? So next, guys, we have the Fibonacci and the fractal. So I'm going to go back to this chart and we're going to wrap this one up. And I'm going to show you guys what I mean by that. So, the Fibonacci is very well used for the previous day's range, but it's also used for the morning leg, right? So I wrote about this in my book very extensively, the morning leg. So here we go. Here was the 930 bar right here. So you could see we had this vertical push. The morning leg usually lasts like between 15 to 30 minutes. So we have a push from low to high. Okay, so low to high like this. And it's the same thing, guys, that we just looked at, but you're actually doing it on a much smaller time frame. So for example, instead of taking the previous day's range, which was down here, you could see it's exactly the same thing right here from the 10% up to the 272. This zone is exactly what we're trying to do with the previous day's range, but we're doing it on the smaller legs. So this Fibonacci strategy, what it's trying to say is anytime we make a new high, when you can see the reversal at these Fibonacci extensions, you want to buy puts. Anytime we make a new low, like in this case, we make a new low, we can go ahead and use the low to buy calls. And you can see when we came up on the 10% here, guys, you got the big wick rejection, right? So you go ahead and you can buy your puts right up here with a very low risk. And then there's your reward. So the whole point of it is we're trying to do the opposite every single time. If the stock is making a new high, right, intraday, this is a new high on SPY, we want to say, okay, let's put the Fibonacci up there. Let's see if we can find reversals. Why do we want reversals? Because reversals are always going to give us the best deal to make money with a small account. Okay, so that day is done. Let's leave this one. Here is another example of the previous day's range. So if you guys can see this here, this is the previous day's high and the low. And what we did here is we actually broke through and came to the 10%. And right at the 10%, guys, we had a double bottom pattern. So we touched it 1, 2, 3 times. We had this little doji and then we popped. That's another example. That's a Lotto Friday right there play that you can do as well. So double bottom at the 10% extension. You buy your calls when it's coming down so you can make money. Okay. And then over here, I have something else highlighted, which is came in at 225. This is a Nirvana pattern. So the other part of the strategy is the fractal trades. So what the fractal trades are basically just any one of my patterns, right? Inside bar, outside bar, Nirvana, Holy Grail. And what the reason why these patterns are good is because it gives you a tight entry and a tight stop. So for example, here's a Nirvana, right? Here's one, here's one. Each one of them, guys, you're risking a bar. So in this case here, you have the Nirvana inside, outside. It breaks the high. You get triggered for calls. Your stop loss is on the other side. So these are excellent opportunities. You're probably risking 10 or 15% per trade. And then the upside, guys, is huge. It could be like 100% plus. Okay, so those are fractals. And what I like with fractals is I like the fact that they give you a tight risk reward. I specifically like the advanced patterns, like the blue ones are the Nirvanas. So that's my advanced indicator, guys. So if you get the book or in my Discord, you get this one for life. The Nirvana is one of my favorites because the risk to reward is always there in your favor. So that's a fractal. So let's close that one. Okay. All right. So hit me with an 8. You guys still there? I still have you there? We good? So we talked about taking the previous day's range, using the Fibonacci as extension. Then we said looking at the smaller legs intradays and orbs and triggers. We're going to save that for another video because I just realized that you guys are probably really busy today and we don't have a lot of turnout, so I don't want to make the video too long. But yeah, so the whole point of this video again is we're looking for cheap premiums, right? And the cheapest premium is always going to be from a reversal trade. So let's go to this one here. I have some more examples here. So this is the January 20th, which and all these trades that I'm showing you, I've taken them in the Discord with my members. Okay, so this is not no like hindsight stuff, guys. Right here on the live rich commentary, we give commentary every single day, and you'll see. Actually, let me show you the one we took on Friday. So before we go, where are you? So short on the inside bar, covering some. Okay, so this was the last one we took together, which was this one right here. So let me show you guys another example. Okay, so this was literally this Friday, and let me show you what I mean. So we start off here. So here's 9:30. So let me hit the replay. All right, get rid of these lines. All right, so we hit the replay. So this is Friday. Okay, this is literally 2 days ago. 9:30 bar. We're hanging out, doing our thing. Boom. Okay. So the first signal here was this tight inside bar. So this one was a fractal trade, break above the high, stop below the low. You're risking maybe about 5 to 10% here on these calls. And the upside is obviously 10, 20% easily. So that's double up. And then this was the one that I took in the room where I called out here. You could see last play for me today, short on the inside bar, covering some nice follow through. So this one actually, guys, what I'm trying to show you guys here is you could take a very small bar like this. This is a fractal, it's an inside bar, very tight, right? But check this out. So you're short when it breaks the low, okay? And the reason why this is such a powerful strategy is because look, this inside bar is at the high of the day, near the high of the day. So obviously the puts are going to be cheap, right? They're going to be cheap because it's running up. So the puts are going to be cheap. So what you do here is once we break the low, that's when you enter the puts. And then let me just fast forward. Boom. So there we go, right? So that's an example of a fractal trade. So when you combine the Fibonacci and the fractals together, now you have a good strategy because what the goal is, you take 2 or 3 of these plays and hopefully one of them works. And that one that works, guys, on a 0 days to expire can become a big runner. So example, this one right here was way over 100% return, way over that. Okay, on the puts, and your risk was very, very tiny. If it broke back above here, you just close the position. Okay. All right. So there we go, guys. I mean, we're gonna have to cut this short because obviously people are busy today with Super Bowl. Sometimes I just forget because I'm in my own world, just trading every day. But you could also do these with futures contracts. So we do these with futures as well. So for anybody that's really struggling with options, you don't understand the Greeks, etc., like you're having trouble with it, take a look at futures. I've talked about it extensively. It's a great tool that you can use without any DK and any Greeks, and you can trade it just like shares. So you could just short here, put a stop loss up here, and you could have easily made maybe 20-30 points on that, which is a lot of money. All right, let's do one giveaway today. I'll do another one tomorrow because there's not enough people here right now, but I'm just gonna go to one of my last videos. So mastering the 5-minute chart, I'm gonna do this video right now, and I'm gonna pick a winner here. So we have 42 comments, so I'm gonna do a random number generator right now. Okay, so 1 to 42, and the winner is number 19. All right, so anyone that comments, guys, you always have a chance to win. You have a chance to win a giveaway from me. So make sure you comment 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. Okay. This brother right here, STKTDR71. What's going on, brother? I know you, bro. You're a part of the Trading Wars Army. So congratulations on your win. DM me, bro. We'll verify you and we'll get you one copy of any one of the books, 1 month for free, anything you want, brother. Thank you very much for participating. Appreciate you. All right, so there's one. We'll do another one tomorrow because we just don't, like I said, we don't have enough people here. But yeah, so there we go. So just to summarize here, what we're trying to do is I'm trying to teach you guys with a small account. What you want to do is you kind of want to go in the opposite direction. So if it's running up, look for short opportunities, right? If it's running down, look for long opportunities, because what's going to happen there is you're going to get cheap option premiums. That's how you're going to make money. So always focus on cheap option premiums. Use the Fibonacci and the fractals to guide you, and you should be fine. Okay, and then make sure you have the Trading Wars golden indicators added to your chart. These are going to definitely help your trades. These are for free. Make sure you add them. I created them with the help of great people, and this is something that I want to give to the community. Lastly, I have some parts from my book I wanted to actually share today. We have this is the Lotto Friday section from my book. I have a whole section on how to play lottos, and you can see here is an opening range breakout, 100% on puts. Here's one with the fibs, inside bar fractal. So guys, if you're interested in more and you like what I'm talking about, if it makes sense to you, please check me out at tradingwars.com. The SPY Options Mastery book is the one that talks about the lotto plays, if you're more interested. And if you get a copy of the book, you get 1 month for free. You can trade with me tomorrow. All right. And it's important to have the education as well as the experience. Okay. So I generally use this strategy on Fridays. Okay. For futures, do you need margin account? Yes, you do. All right, let's wrap it up here. Don't want to take too much more time. Make sure you comment. You always have a chance to win a giveaway. I think that, this knowledge is very important, guys. Trust me, it could change your life if you really want to apply yourself. And keep studying, keep putting in the work, and I'll catch you next time, and we'll keep going from there. All right. Good luck with your Super Bowl picks, and take care.